Whenever you open up a brokerage op, check on your retirement fund, or even just skim the financial news over coffee, you're actually interacting with a massive, invisible infrastructure. Today, we're going to dive into the fundamental regulations that keep the American financial system honest and, frankly, functioning. I am super excited to walk you through this because this topic is literally the backbone of our entire economy. We're going to take all that dense, intimidating regulatory code and translate it into clear, everyday language that actually makes sense.
So think about it for a second. What keeps our multi-trillion-dollar stock market from just devolving into the Wild West? It's a pretty wild thought, right? Because without rules, anyone could just sell you shares in a completely fake gold mine or some tech startup that only exists on a spreadsheet. A market like ours relies entirely on trust. If you're handing over your hard-earned cash to buy a piece of a business, you need to know that business actually exists. You need to know their profit margins aren't just completely made up. Without a rock-solid set of guardrails, human nature and plain old greed could so easily turn Wall Street into a total free-for-all, leaving everyday professionals like us totally exposed to fraud. To stop that chaos dead in its tracks, we have what you can think of as the ultimate rulebook for fair play. This rulebook is essentially the DNA of corporate compliance here in the US. It's the thing that guarantees that when you invest your money, the game isn't just secretly rigged against you. We're talking about a massive framework of federal regulations dictating exactly how public companies, brokers, and corporate insiders are allowed to behave. Now don't worry, we aren't going to sit here memorizing legal citations today. Instead, we're going to look at the core principles of this rulebook and figure out why it actually matters for your financial life.
All right, so here is our roadmap. We are breaking down this massive framework into 5 totally intuitive pillars. We'll start with the market's trust rulebook, move into keeping public companies honest, look at banning fraud and manipulation, discuss guardrails for financial professionals, and finish up with whistleblowers and the consequences.
Okay, Section 1, the market's trust rulebook, establishing the foundation. Before we really get into the rules themselves, we have to define exactly what it is we're regulating. And the big word here is security. So what is a security? Well, in plain English, it's just a tradable financial asset. Think of a share of stock. That represents a tiny, tiny slice of ownership in a company. Or a bond, which is basically a loan you've made to a corporation. It's the financial instrument you're buying or selling. And this entire regulatory framework we're digging into was built from the ground up to protect these exact assets, making sure that when you buy a security, it holds legitimate, legally backed value. Moving right along to Section 2, keeping public companies honest, which is our transparency pillar.
So, let's talk about the strict transparency requirements placed on public companies. Simply put, a company cannot just take your investment money and then go totally dark. It doesn't work that way. They are legally mandated to provide highly structured, specific updates. First off, they have to publish these massive, comprehensive annual reviews of their financial health, and those have to be audited by independent accountants. Secondly, they have to put out routine quarterly updates so we can track their progress throughout the year. And third, this is a big one, if something huge happens out of the blue, like, say, the CEO suddenly quits or there's a massive merger, they are legally required to issue an immediate public alert. The whole idea is that you are never left in the dark.
And why does this actually matter to you? Well, because when you're taking your first few paychecks and you're looking up a company's profit margins on your phone, you absolutely need to know those numbers are real, not just some corporate fiction. Compliance rules enforce that reality. If a company fakes their numbers, they are looking at severe federal penalties. This regulation is literally the reason you can invest your money with any level of confidence. Section 3. Banning fraud and manipulation. The fair play pillar. Now, transparency is great, but it has to be paired with strict rules against outright deceit. There is a very exact line between legal and illegal behavior in the market. You've basically got 2 sides of the coin here. On one side, you have fair trading. That means you do your research, you read the news, you check out public reports, and you make an investment decision. Perfectly legal. But on the flip side, you have market manipulation. This is when an insider knows a secret, like, say, a new drug just failed a massive clinical trial, and they sell off all their stock before the public finds out. Or it's a classic pump and dump scheme where bad actors spread lies online to artificially inflate a stock's price, and then they just dump their shares. The rules explicitly ban these deceptive practices because a fair market relies on a level playing field for absolutely everyone. On to Section 4, guardrails for financial professionals. Basically regulating the middlemen. We've talked a lot about companies, but what about the actual people processing your trades, the brokers and dealers? These middlemen who execute your trades and hold your assets,
They can't just set up shop in a garage and do whatever they want. They face some intensely strict requirements. They have to pass rigorous exams and register professionally. But more importantly, they're legally required to strictly segregate and safeguard your money so it never gets mixed up with their own business expenses. They're also forced to keep minimum cash reserves on hand. So if the market suddenly tanks, those reserves ensure the broker doesn't instantly go bankrupt and take your whole portfolio down with them. It is a massive, absolutely crucial safety net for your digital wallet.
And that brings us to Section 5, Whistleblowers and the Consequences, the enforcement net.
Let's be real. Rules are completely useless if nobody is enforcing them. So, here's the typical life cycle of a compliance failure. Step 1, almost always is a violation happening in secret. Say, executives are hiding debt just to make their company look more profitable. Step 2 is the catch. Either a surprise, routine audit finds the missing money, or, and this is common, an insider with a conscience, a whistleblower, frags the illegal activity to the government. That triggers Step 3, where the authorities drop the hammer. We're talking massive corporate fines, and those executives being permanently barred from ever working in finance again.
$1 million. That is a massive financial threshold in the regulatory world. See, if the government successfully goes after a corrupt company and the financial sanctions end up exceeding $1 million, the whistleblower who provided that original tip, they are legally entitled to a percentage of that massive payout. By putting real, genuinely life-changing money on the table, the system highly incentivizes people on the inside to step out of the shadows and blow the whistle on bad behavior.
But, money isn't everything. Safety is just as important. So strict protections ensure that whistleblowers can report fraud safely and completely confidentially. The compliance framework makes it a severe federal offense for a company to fire, demote, or even harass an employee just because they reported corporate crimes. It ensures that a mid-level accountant or a young professional just starting out never has to choose between keeping their career and doing the right thing.
So as we pull all these different pieces together, the major takeaway really becomes crystal clear. Compliance isn't just boring corporate red tape. It is the absolute lifeblood of a healthy, functioning economy. I know it's so easy to hear words like regulation or compliance and just roll your eyes at all the bureaucracy. But these rules, the transparency, the anti-fraud measures, the guardrails for brokers, the protections for whistleblowers, they are exactly what allow you to sleep soundly at night knowing your investments exist in a fair, highly regulated ecosystem.
So, I want to leave you with this final, kind of provocative thought to chew on. How do these invisible rules protect your own investments and your career right now, today? Whether you're buying your very first fractional share of a stock, contributing to your company's 401k, or working your way up inside a growing corporation, this rulebook is silently working in the background to ensure you always get a fair shake. Thank you so much for hanging out and going on this deep dive with me. Stay curious, keep learning, and I'll catch you next time.
If you found this helpful or want to stay updated when this regulation changes, subscribe and support the channel. And if you need the full technical details on this CFR, click the link in the description below. See you next time.